Welcome back to another one, guys. What a good week in the market. We managed to make 5% or 5.5% return this week, and we're going to break it down in this video. We're also going to do a complete breakdown of the markets, how they've been moving, US30, and next week might be setting up to be a very good week in the market. So let's get into it. So first things first, we're going to delete everything and start again, just so we can have a complete breakdown. I'm going to also give you some tips on how US30 moves, as promised, that I rarely hear people talking about. So I'll give you some of those as well. So first things first, on the monthly time frame, we had the last bullish push to the all-time highs, which was in November last year, 2024. Okay, we then had a retracement. We did not close below the previous month. We tapped it in January and we pushed all the way back up to that same all-time highs, followed by a doji month. And of course, as you can see, the month is ranging. We then had the drop down. We wicked below November's month, and then we pushed back up, retraced. In April, we then pushed all the way back down. We wicked out these lows, and we retested this previous high. So as we know, usually price does or moves in this kind of fashion. So higher lows and higher highs, and price usually retests the previous highs when we're moving in a bullish market. Now we know US30 is an index. It's of the top 30 companies in US, and the markets are usually bullish. Therefore, over a long period of time, so monthly time frame, price will be in a bullish structure movement. Okay, so we want to keep that in mind. So hence why when we had this wick down, we tapped into this area here, this retest, previous high monthly, and then we shot all the way back up. However, I do expect price to hopefully come back down and tap this area, which is the, let me just quickly change this. I do hope price will come back and tap this area, which is the monthly demand level. As we left a lot of imbalance, we left the demand level, we've gone all the way back up, we did not retest it. Usually price does like take out demand levels before going back up. And I'll explain to you why I think we're probably going to do that anyway, going forward. Yes, it's possible we could just come back all the way to all-time highs, but I'm hoping that it will come back down. And technical analysis is giving me the indication that it's possible. So on the monthly, again, what do we have? We had April, wick back down, close inside the candle of March. And now May, we've had the retracement as a bull candle, and it's looking like, well, of course, we're going to finish inside April's candle. We did not close above, but we did test the highs. Now, why do I mention these candles closing inside? It's because of this reason alone. When the monthly candles are moving, or when bullish candles are moving, sorry, on US30, this is a little trick that, or a little hack that people may have spoken about this in a different way, but the simplest way to understand it is when the candle's moving, if price does not close below this previous bullish candle, we're still bullish, i.e. price would need to have a body close below. So as you can see, this candle here was a body close, but this is a caveat. When you have the body close, if you're followed by a bullish candle, then you're actually still going to be bullish. So in US30 anyway, you're allowed one candle close below, or you can have multiple wicks. So here you can see price came down, but it closed back inside the bottom of November, closed back inside. Then in April, price came all the way back down and it closed inside of March. Can you see how price did not close below March's wick? So technically we are still bullish. Does that make sense? So we're allowed one body close. So price could come all the way back down here, have one body close down here, and then followed by a bullish candle, which will indicate we're still going to be in a bullish market. Hope that makes sense. I'm trying to keep this as simple as possible because we're going to do a weekly breakdown as well. I will go more into detail about some of these little hacks of how US30 moves specifically. But the quickest example I can give you is the same with this. You can see this was a bullish candle. Price came down, bear candle, followed by another bullish month, bearish month, and price, when it went below this wick, it was then followed by a bullish candle, and we then continued up. Bearish candle, one bearish candle. Then you had this one bearish candle, which is a bearish engulfing candle, but we're ranging in this whole area. And you can see price never closed below this previous month, and price continued back up. And then again, one more example. Let me quickly just move these out of the way so it's a little clearer. You can see this was the monthly candle low, bullish. Then you may ask yourself, how come this one closed below it and this one also closed below it? Because this is the support level. So it will always respect the low. So this being the low, it respected this low, bounce, 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 and continued up. So this is the only time where you could have candles continuously closing below as long as we hold below this level. If we had one candle close all the way below, then followed by a bullish candle, then again, that would reinstill the notion that I'm giving you that would remain bullish. Okay. I hope this is making sense. I'm going to just try and cover this as quick as possible so we can get down into the weekly breakdown. I'll move these back. So this is the demand level on the monthly that we left, and this is the day on the monthly, and this is the weekly demand level, as we'll get back into in the next time frame down. So let's go to the weekly. So as for the weekly, you can see, let me quickly get rid of this level. As for the weekly, you can see this is the weekly demand we left, which we're hoping for price to come back to. Again, we have to be prepared that it's possible we could just go back into all-time highs. But my bias is that we are still bearish, and I'll give you my reasons for that as well now. So what do we have? We had price creating higher highs and higher lows, all the way back up, all the way into all-time highs. We then had this drop down into this support level. We then had a bullish engulfing candle, test all-time highs again. We then had a break of that support level, a retest, and then a drop down, which puts us into bearish momentum. Yeah, which is the same as you see here. This was in November 2021. We had all-time high bullish structures. We then had the high, retest of the support level, push back up to all-time highs, wick below the support, a small retracement, and then we broke it, retest, and then we continued bearish momentum. This is exactly what I'm hoping for to carry on now. Or just a quick one, let me quickly jump back to monthly and show you. The reason why I believe this is because whenever we have monthly ranges at all-time highs like this, we're then followed by the drop. So monthly ranges, then we have the drop. When we're at all-time highs, monthly ranges, then the drop. So I don't believe this drop is finished. Again, you saw that this monthly drop came down to monthly demand that took us into all-time highs. That's the monthly demand level. This was of November 2020. So keep that in mind, which is why I expect this to drop down again. So let's quickly go back to the weekly. Let's now start to draw out some levels so we can see clearly what's going on. So I'm drawing a monthly support here. You can see that we broke above it, bounced, came back down, retraced, bounced, pushed back up all-time highs, bounced off the same support level, all-time highs, double top, came down and wick below it, then retested it, and then rejected. We've come all the way back above it. One weekly candle closed above it, then the following weekly candle closed below it. We've had this week that just finished, which is closed back inside this, so we're ranging on the weekly. Of course, when we go down to the daily, we'll see a little bit more clearly. Now, remember what I was telling you about the candles closing below? This is a better example because we have more candles to see. So you see how we had this bearish engulfing candle. Price came down. The next candle did not close bearish. It closed with a wick into the lows and then continued back up. One bearish engulfing candle followed by a bullish candle. We're still bullish. The same goes when we're bearish. So we had this bearish candle. Bulls came back in, retraced, continued back up, but we still haven't closed back above this weekly candle of 31st of March. So until we close clean above this weekly candle, then I'll know, okay, it's looking like we may be bullish. Okay. We are keeping in mind we're also above the 50 EMA, but in a retracement fashion, that's very possible. So we had the drop, we have had the retest, and now we're expecting the rejection to continue back down. We're expecting A, B, C. Trend, major trend continuation. You can also measure it from the highs of the all-time highs when we drop down. So this will be the leg down. This is then the leg back up, the retracement, and the continuation. If you use fibs, you could have put a fib level on there as well, from this drop down to here, and you can see we've tapped into the 76.4 level. Again, hoping for the continuation. Now again, the continuation, if you look at the minus 27.2, it's also lining up almost with the monthly demand level. So again, more reasons why I think we may still be bearish. If we continue back down to the daily, now we start to see some more clearer price action. We've had this retracement up. You can see that it's taken way longer than this drop down. Usually that's what happens when you're bearish. So you'll have lower lows, lower highs. And when it's going back up and it's on a retracement, it usually takes a lot longer than the continuation or than the impulse leg. Usually this retracement leg is usually larger, especially when it comes to Dow. Rarely do you have impulse legs. So as you can see, these are all impulse legs. Do they take longer than the retracement? You can see that when Dow is bullish, it's bullish with intent. You can see how much volume it comes in with when it's bullish. It's always a lot faster. Okay. Same down here. Look at how long this retracement took and look how quick this impulse was just to cover the same amount of time. Yes, I hope this makes sense, but you can always just scroll back and take a look at all of this. Whenever you have the retracement, the impulse leg back up is always way quicker than the retracement because Dow is mostly bullish. So this is another reason why I think we're still going to be bearish, because this leg has taken way longer. And we've had A leg, B is the retracement. We're hoping for C for the continuation leg. As you can see, we've had so many candles. And if we count here, you can count 1, 2, 3, 4 candles, which are the daily candles, brought us down to this low. But how many candles have taken us to get all the way back up there? We're on 51 days, 51 candles, which tells me that this bullish volume that came in, it does not have this same kind of volume and intent to go back up. Now, if we look at the daily, we can look at these being the highs, the high that we need to close above. What did we have? When we had this retracement, we had a bearish engulfing candle, dropped back down, left this supply level, price wick back up into supply, and then continued down. We've slowly been creeping up without really strong intent on the daily, creeping up, and we've tapped into this daily high, followed by the 1, 2, 3 reversal. We left this supply level, which I'll quickly just mark out. We left this supply level. I'll mark it in yellow. Get rid of this quick double top just a second so you can see. We've left this supply level. I'll move this out of the way quickly. We left this supply level from this bullish candle, 1, 2, 3 reversal. Supply level, we've tapped into the supply level. And again, the same thing. If you see, look at the leg coming down. Look at how many candles it's taken to come all the way back up to tap into the supply level. So this tells me that this, after it touched into the double top, this was an impulse and then a retracement. And we're looking for the continuation leg, which will lead into the long-term continuation. This reversal also broke the lows. So of course, as you know, that if you're bullish and you create a low, i.e. this low here, if you then come back down and break that low, there's a very good chance that we're in now bearish momentum. Okay. Quickly get rid of this, get rid of this, get rid of this. So I'm also going to break down the trade that we took in this week, which I did put in my free Telegram. So we had this bearish engulfing, this 1, 2, 3 reversal. We broke the lows. We then had these wicks, which were closing this gap and tapping into these lows. We then had a bullish engulfing candle and then started moving back up. When I saw the bullish engulfing candle, I knew there's a very good chance we're going to tap into supply or the double top. Now, what I didn't know is how far up we were going to go. So if I quickly remove this supply level, when you're looking at a double top with the daily, with US30, this is the zone for the double top. It doesn't necessarily mean price has to come and wick at this high level where it reversed from. If you see that there's a wick on one side and then the candle starts on the next day, this whole area is double top structure. So as long as price taps into this area, that's the double top created. So my aim was that price was going to come back into bullish engulfing, retracement. Price was going to come back into this area here. And then we can hope for the reversal to then come back down. Okay. So we go down to the 4 hour, which is exactly what we saw. We had bullish momentum, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We then had a break of these lows. We've then had the retracement, and this is the retracement leg back into that double top area. Okay. And of course, you can see that we had highs being created. So liquidity zones being created, like these little areas here. Price then turns around, bearish engulfing, making people think we're going to start selling again, and it'll take out the liquidity. Then the same thing happened over here. We had these little highs created. Price came back down. Then volume impulsively took those out to hit into that double top level that I'm telling you about. And then we had the leak from there. So I got in. Let's go down to the daily so I can explain this move to you. Go down to the 1 hour. So I was paying attention to highs and lows. So this is the high we needed to break. We had the bullish engulfing candle. So even after the bullish engulfing candle, I still wanted to see the higher highs break these highs and then retest. Price came and created this liquidity zone. You've got a lot of imbalance here as well. I'm expecting targets to go up here. So once price started reversing, I could see that we didn't break these lows, these minor lows on the lower time frame. We pushed back up. Once we broke these highs, I actually took a buy trade right here when we cleared those highs. Oops, wrong one. I took a buy position right here. And my lows initially were right below those lows. So you may ask yourself, how come I didn't get stopped out? I was monitoring this trade closely. I wanted to keep my stops tight, but I was also aware that there's a low here and US30 loves taking out lows. So as I was monitoring this, when price started shooting back down, I did adjust my my stop loss. Sorry, I moved it slightly below a few candles, and it whipped into the area, and then it turned back around. So the reason I did that is because I know that US30 loves tapping into lows a lot of the time. It will tap into lows a few times, like here, for example. It can tap into lows a few times, it'll create a new high and come back to the same low before continuing. So I know that unless price clearly breaks below and then retraces up, that unless we see this, we're still bullish. Okay. So when I took this buy position, my take profit was that same double top. So my entry was just along the top of here when we saw the volume shooting, and my stops were here. There we go. So this was the 4-to-1. Literally, it tapped my take profit and dropped straight away. So it just goes to show you US30 moves on levels. So you always want to make sure that you're paying attention to the levels. Okay. Again, we'll go over this in another video as well. I'll talk to you about the levels of how US30 respects them. So once we had that, again, price wick below, I moved my stop, it shot up above. And as you can see, this screenshot here, I'll move this across. You can see the screenshot of, you can see two positions. Those two positions, the second one I entered was this one right here. Let me double check that. Got in above the retest. So price came back down. As I was mentioning, price will hit lows. So you can see we created the new high. We still came back to this area here, and then we've continued with the impulse up. Again, until we break these lows, I knew that we weren't bearish. So I then took another position. When we had this wick, we had this second candle that closed inside, followed by a bullish candle. And when this bullish candle started shooting up and closed above this bullish candle, I assumed that these wick rejections off this previous support level were going to give me another opportunity to get in again. I took that as well, and that gave me a risk reward of, I think it was a bit higher. It was 1.7 or so. So I took two positions and they both came in. The spread on this, the swap fee, sorry, on this overnight was crazy. So I got 5.5. So I lost 0.2 for swap fees, but 5.5 are risk reward. As you can see, the two positions with the screenshot there. But you feel free to obviously double check these numbers as well. They're roughly, these trades were also taken on my FTMO and on my personal account. So the FTMO is moving. I'm going to create an FTMO series as well. So now, as for going forward, what are we looking for? If I quickly go back to the daily, what did we have? We've had this impulse down that we've spoken about. We've had this retracement. We've now had the last 2 days finished bullish, but just wicking. There's no clear bullish intent, okay? This bear candle, remember when I said about we need to break the lows first before we can confirm the lows? So this was the last bullish candle, which we've wicked into. So we're still technically bullish until we see momentum shift and then drop below. And then we know that, okay, we're going to be into bearish momentum. So I'm watching this red level. If I go down to the 4 hourly, I know that we've already tapped into the supply. It's very possible that we could come back to this 4 hour minor supply. Let me quickly mark it as green. It's very possible we could come back and tap into here before leaking. However, given that we actually came back to the daily supply already, we may actually just skip this and just go and just continue back down. The other reason is usually when we're bullish, again, you can see that when price is coming down, you can see there's lots of wick rejections. But on the way back up, when we're bullish, we usually just create new highs. So we pushed up, one bear candle, pushed up, one bear candle, lots of bullish candles, and usually fewer bear candles. You can look at the volume that's taken. So you can see here, there's one candle, two candles, and then we have our 1, 2, 3, 4, 5, 6 candles bearish, one candle bullish. But then we look at the volume switch. I always talk about volume switch. When we came back down, we had 1, 2, 3 huge bear candles, which finished with the wick. And when bulls was time for the bulls to come back in, because we've hit the lows, one bullish candle didn't go anywhere. Another bullish candle didn't go anywhere, didn't close above these highs. A few more bear candles. One bullish candle was tested, we didn't go anywhere. But you can see that we created this little liquidity zone just above here. 2 little highs, we've taken it out, we've closed back below. This tells me that price could, if I go to the 1 hour, price has popped back down, created this range, this liquidity zone, is wick back above it, taking the liquidity. Again, we could have had these 2 candles, and now we may push back up slowly and then drop, or it's very likely that we actually may just drop all the way and just continue bearish. Okay. What we've also got to keep in mind is if we have a 4-hour bear candle, I'll quickly go to the 4-hour. If we have a big 4-hour bear candle coming back down, let's say next week like this, don't just get in. I would wait for the retracement of this level, because clearly it's a solid structure level. Wait for the retracement into this breaker candle for the supply for momentum, because this is bullish. This is bullish momentum. When it becomes bearish momentum, we usually do have the retest if we have a huge bear candle breaking that. I'll then be taking sell trades from this area and continue them down. And then I know if we're in bearish momentum, there's a very, very good chance that we're going to continue the long-term downtrend, because we've, again, hit the double tops, previous weekly highs. We've come back to the double top on the daily. We've now switched momentum and gone back down to bearish momentum. So that's literally what I'm waiting for, guys. Hope that's nice and clear. Again, join the free Telegram, because I break these things down every single day. So it'll be very helpful for you to kind of be aware of it as it's going along every day, rather than wait for the weekly breakdowns. Have a good week, guys. I hope you enjoyed the video, guys. Click the like and subscribe button as well. Leave some comments. If there's something you want me to explain, let me know so I can, of course, explain them in the next videos. Have a good week, guys. Take care.